The stock market is on absolute fire right now. And you want to know, what are the best stocks to buy now? Which stocks should I be looking at buying? Or maybe even selling? I'll share with you what I'm doing in my $3.4 million portfolio. Plus, I'll provide some bold predictions for the second half of 2025. Let's go. All right, first, let's address the elephant in the room. This is an absolute monster. Palantir reported earnings last night, beat on the top and bottom lines, also raised guidance. We're talking about 47.5% year-over-year growth, beat by 60.53 million, EPS beat by 2 cents. So revenue of $1 billion for the first time. You can see the consensus was 0.94, so you got a beat on the top and bottom again, and a raise on guidance. So when you look at FY25 guidance, the consensus here is 3.9 billion. We have a midpoint of 4.15 billion. So we're above by 0.25. US commercial revenue grew by 93% year over year to 306 million. Government revenue also 53% growth, 426 million. Closed a record $2.27 billion of total contract value, and customer count grew 43% year over year. So these are some solid numbers, and this is what you need if you want the stock to go higher. Where's it going next? Well, we're going to look at a chart. We know that it's expensive. Well, we're up 7.58% today after that strong earnings. Actually hit $176.33, the high today. Talking about over $175. Just a year ago, in August of 2024, when we were doing Palantir videos telling you to buy this stock, we're talking about $24. Now it's $175, up 613% in the past year. And if you would have bought Palantir on the day of the direct listing back in September of 2020, when our Discord community did, you're up 1,768%. Of course, you probably dollar cost average and bought more shares, but you're absolutely killing it. You can see my position here. I'm up 1,400%. So the question is, what do you do with the stock now? Where's it headed? Online, it's pretty mixed. You know, Palantir stock popping 8%. Here we have RBC Capital raising the price target to 45 from 40. It's $170 plus. Jim Cramer dropped a price target. He said $200. I think $200 is probably possible. Look at a chart here. And you're even seeing authors from Seeking Alpha saying dumbfounded, but 110x free cash flow is still cheap. Drop me a comment below. You let me know what you think Palantir stock is worth. Now, just in case you're wondering, the EV NTM revenue is over 85x. Cloudflare is sitting around a 30x, and companies like AppLovin about 25, CrowdStrike 22x. Check out this infographic. This just came out from Palantir on the earnings last night, and they're showing a rule of 40, 94%. And when you compare that to software companies, nothing else is even close. Net dollar retention is also around 125%. Profitability metrics are very strong. If you're looking at a PE ratio, well, of course, it's going to be expensive. This is SaaS, recurring revenue. But that PE gap forward is about a 462, the TTM 669. You know, looking at a chart, a few weeks ago on chart day, I said, hey, there's a good chance you'll see something like $200 on Palantir this year. This R3 Fibonacci is $181.63. If people continue to pile into this name, of course, the stock is going to go higher. It's a market. It's about buyers and sellers. If you have more buyers than sellers, the price is going to go higher. So my bold prediction here is that Palantir is going to hit $200 a share in 2025. What am I doing? Personally, I'll probably trim some shares around that $200 price. I do plan on holding some of those shares as a long-term investment. These are what we call house shares. So we've already taken the initial investment out and we're kind of letting it ride. But again, drop me a comment. Tell me, what do you think Palantir is worth? And what do you think the stock price will top out at in 2025? All right, next I want to share a stock that I'm buying right now. This is a new position in the community portfolio, and I honestly believe that this is one of the best stocks that you can buy in the market right now for the price. Of course, in Fired Up Wealth, we're investing in secular growth trends. We've been talking about cybersecurity for years. Now, the total addressable market, or TAM, for cybersecurity is only going to get larger. In fact, a recent McKinsey study indicated that AI is expanding the cybersecurity TAM by $2 trillion. And if you're a nerd like me, you've probably read this cybersecurity report here from CrowdStrike. You can read this free online, but it'll absolutely terrify you if you read through this. Just a couple quick examples from my notes. Of course, that report is going to show you a surge in cybercrime. Ransomware attacks increased 80% year over year. This is costing businesses about $10 billion globally in 2024. Data breaches exposed 2.6 billion personal records, while 65% of organizations hit by cyber attacks face repeat intrusions within 1 year. Where am I going with all this? Of course, CrowdStrike is my favorite cybersecurity company since 2019. I'm not buying the stock right now, but what I am buying is Palo Alto. And the reason the stock is down, if you follow this channel, you watched the last video. I talked about why the stock is down and why I'm buying it. If you're not a subscriber here, make sure you subscribe, click that bell for notifications so you see every video. But Palo Alto is looking at acquiring CyberArk for $25 billion. And of course, that oftentimes will make the market gyrate, a little hesitant. Hey, that's pretty expensive. You're paying a premium. Can you make this work? Now, just today, the CEO of Palo Alto confronted Wall Street skeptics after company's biggest bet yet. And I posted a summary of this in our Discord community, but Palo Alto's market cap is up sixfold since the CEO joined in 2018. However, the stock is down sharply since the company said it's buying CyberArk for $25 billion. One of the reasons why I'm buying it. During his tenure, Palo Alto's made over 20 acquisitions, and Palo Alto really wants to be a one-stop shop for the full cybersecurity stack. Now, again, if you watch that video, you know that this is about agentic AI agents, and the cybersecurity for those. But the quote here is excellent. We look for great products, a team that can execute in the product, and we let them run it. This is going to be a different challenge, but we've done well 24 times, so I'm pretty confident that our team can handle this. Now, valuation-wise, you've got a PE gap TTM of a 99. The forward is about the same, but this is another SaaS recurring revenue type stock. And we just talked about Palantir, which is 85x. It does have amazing growth, and there's a lot of excitement around that stock. This trades closer to a 12x EV/NTM revenue, and that Rule of 40 score is still over 50%, so it's very solid. So I'm buying Palo Alto Networks, $170 or less DCA. Now the fibs did update here today. These are Fibonacci S2, 162.49, S3 Fibonacci, $148.18. The stock was $144.15 in April, so could it go below $150 again? Absolutely, it could. I think there's a low chance that it happens, but it certainly could happen, especially if there's another headline. Also, keep in mind, Palo Alto is going to report earnings Monday, August 18th, and that could make the stock pop or drop. Now, my bull prediction, and these are just for fun. Try not to beat me up too bad if I'm wrong. These are just for fun. But my bull prediction is that Palo Alto Networks will be at least $225 a share this time next year. Okay, I have two growth portfolios, the main and the community portfolio. The number one holding for each of those is NVIDIA, and I'll talk about NVIDIA in a second. In the community portfolio, the second largest holding is a company called Astera Labs. The ticker is ALAB. Astera Labs just reported earnings, and you had a beat on the top and bottom lines. You can see the non-GAAP EPS beat by 12 cents. Look at this revenue, up 149.6% year over year, beat by $19.46 million. You can see right now, the stock is up almost 10%, hovering at $148.40. We're pushing $150. This stock was $36.22 in the 52-week low. And just in April, ALAB was $47.13. Rocketed all the way up here to $143, and it's actually at new all-time highs, post-market at $153 as I speak. So this is the community portfolio. You can see NVIDIA, 9.53% of the account. Astera Labs, 7.71%. Now, we were up 94.5% at today's close. Of course, it's even higher now after hours. Where's the stock headed next? Well, this R3 is up here at $179.21. I think that's absolutely possible. For me, this is a long-term investment for 2+ years. I think if you hold this for several years, it could do very well. It is a little bit speculative. It's risky. It's an expensive stock. It has extreme growth. This is a hyper growth stock, high risk, high reward. So when you think of that spectrum from spec all the way to income stock, I think it's somewhere in that hyper growth category. So it's still speculative, but I don't classify it as a spec stock. I classify it as hyper growth. Now, because of that blueprint allocation, I will trim a few shares back just to keep that in line. And this bold prediction was made back in April when I told the gang, hey, I'm buying more of this. I'm breaking my own rules, my own discipline because I'm going overweight. But I truly believe this stock will be $150 again, maybe even this year. And here we are, $156 post-market. Now, AMD just reported earnings. It is down about 3.5% right now after hours. You can see the non-GAAP EPS, 48 cents, was in line. So we didn't get a beat there. We did get a beat in revenue, beat by $260 million, and that is 31.7% year-over-year growth. For the third quarter, AMD expects revenue to be approximately $8.7 billion plus or minus $300 million versus the $8.32 billion consensus. So we're looking at about 28% year-over-year growth. Our current outlook does not include any revenue from AMD Instinct. This is the Chinese shipments, right? So license applications under review by the US government. So you could see some additional sales that's not being accounted for that could come through. Now, overall, this was a pretty good quarter. You got to remember the stock is absolutely ripped from the April lows. I mean, we're talking like $75 to $175. But looking at this as well, data center, so that is $3.2 billion, up 14% year-over-year growth. I probably want to see a little bit higher number here. You can see gaming actually was up 69% year-over-year. They also announced plans to sell ZT Systems data center infrastructure business for $3 billion, which I think is interesting. But this ZT Systems acquisition that we've talked about quite a bit on the channel, it's one of the reasons to be bullish about AMD. This is now complete, bringing together world-class silicon, software, and systems design to deliver rack-scale AI solutions. This is a good thing right here for AMD bulls. Now, again, guys, this stock ripped from $76.48 all the way up to this R1 at $182. So to see it cooling off when expectations are that high shouldn't be surprising. You know, this stock was $227. We were trimming up here around $200. Bought back pretty heavily, $100 and less DCA. I think I started even buying around 110. Of course, got a lot of haters and things on YouTube, like it's going to go to zero and all that. If you would have bought this stock and DCA at 110 or less, you did very, very well with AMD. You know, some consolidation here, but we're not even back to the 50-day simple moving average. That's something like 140. You know, this 200-day, this purple line's like 123. Where's the stock headed? Where's it going? Now, I'm not nearly as overweight on AMD as some of the other stocks in my portfolio, and it is a long-term investment. I told the gang, you know, probably 175 and 200, I would look at trimming. I didn't trim at 182. And the reason for that, the momentum has been very strong from retail. In fact, this R3 is $213.10. Now, there's no guarantee that it has to go to this Fibonacci R3, anything like that. But in this market, when retail is in a frenzy, buying stocks like AMD, I think there's a decent chance the stock goes higher after some consolidation. Now, it could sell down to under $150, and I wouldn't even blink twice. But my bold prediction for AMD is that I believe the stock can be $200 plus in 2025. Now, again, this is just for fun, and it's assuming that the market remains bullish. Now, NVIDIA is going to report earnings on Wednesday, August 27th. So we've got, 22 days until we get earnings. Now, if you guys remember, late 2024, early 2025, I was telling you that NVIDIA would be 165 to 175 in the back half of 2025. We actually got over $180 a share here recently. Pulled back a little bit. Right now, it's trading about 177. Now, this information that you see up here with these Fibonacci pivot points, none of that was there. We had these circles and these lines for months. And now those Fibonacci pivot points have updated. You can see this R3 is at 202.70. This R2 is $190.55. And the R1 is 183, which has actually got slightly above and then consolidated back. I'm editing this into the video, guys, because I have to share it with you. It's absolutely nuts. I showed you earlier, 94% here. This is rule of 40 for Palantir, and this is for software companies. Now this, again, this is from Palantir's earnings deck last night. Look at this, rule of 40. This is the top 25 market cap companies globally. Now, there are a couple things to point out here. Number one, Palantir is doing really well. Eli Lilly should be on your radar, maybe if it isn't. Taiwan Semiconductor probably should be on your radar. Visa, there's some good companies in here. Broadcom, Meta, Microsoft. Hey, these are all fired up all favorites. Google. Guess what, though? NVIDIA blows everything out of the water with 122%. Do you guys see this over here? Way over here. Absolutely mind-blowing stuff here. Of course, if these numbers slow down, stock is going to get absolutely crucified. But right now, NVIDIA is absolutely crushing it. So my bold prediction is now that you'll see NVIDIA $200 plus per share. Now, you might make fun of that and say, oh, well, that's really hard to predict. It's $183. If earnings are good, it's going to go higher. The thing is, though, is we've been calling NVIDIA since 2022 when the stock was $12 and $15, saying it was a must-own stock for any portfolio. And all on the way, we were calling 150. 165 to 175. Now I'm saying $200 plus is a possibility. So if you've watched this whole video, there are 3 companies that I think can all be $200 or more per share. All right, what are some additional stocks that I'm buying right now? Let's do a rapid fire. Qualcomm. If you've been watching videos, you know why I like Qualcomm. If you don't, if this is the first time here, make sure you subscribe, click that bell for notifications, go back and watch some recent videos, some deeper dives into some of these companies. But I am buying Qualcomm, $150 or less DCA. You can see this S3 is $133.72. It certainly could go lower. You know, in April, this was a $120 stock, $120.80. But I like this stock as a long-term investment, pays you a nice dividend yield. It might not be for every portfolio. Do your homework, make your own decisions. Now, just the other day, I saw somebody making fun of Berkshire Hathaway saying, well, this was the most obvious short of 2025. I don't know if I agree with that, but one thing I will say is that I always tell people in chart day, don't buy these air pockets. You know, you got this blue trend line, it's up at 542. You want to buy when these air pockets get popped. But we're getting pretty close here. You know, if you look at this trend line, we're not far off. You know, this trend line would be something like 445. So if I can get $450 or less DCA in Berkshire, I'm pretty happy. Now, you might not get that. The S3 is 453. So if you're buying it right here in that 455, 465 level, as a long-term investment, I think you'll be happy with it. Could it go lower? Sure. That's where you use dollar cost average and only buy stocks that fit your blueprint, because this might not be your huckleberry. I've also been buying UNH. Now, it looks like maybe a short-term floor. It's hard to say. Getting some sea legs here, but we did bounce from the 230s to 251 here today. Certainly can go lower. This S3 is actually 195. And if you're following Discord, you know, we posted some different articles, $160 is a possibility, 190 and so on. I also shared this with you, the potential bottom scenarios, you know, so near term, 230, 235, the bear case kind of 190 to 200 and so on. And gave you those fibs. But there's this article here, you know, UNH to 160. This is Forbes. This was pretty much the bottom. As soon as this article came out, people started buying it. It's hard to say. There's no way to know with 100% certainty, you know, is UNH going to go higher from here or is it going to go lower from here? You have to use dollar cost averaging, and it might not be the best stock for every portfolio. I don't want people to come on here and say, oh, you told me to buy UNH. I didn't tell you to buy anything. I'm telling you what I do with my money. I'm giving you information. I tell you that most people should not buy this stock. This is a DGI stock, and it does not fit the majority of blueprints in our community. I've also been buying some SCHD. I try to buy some of this every week, and I'm actually thinking about trying to buy some every single day in 2026. So we'll see. But this is 15% of the dividend portfolio. I continue to DCA into SCHD ETF. Now tomorrow, after close, August 6th, you're going to get earnings for CWAN. I've been telling you that it's very possible you see below $20 after earnings. This S3 is $18.40. I have been buying around this $20 price level. It could certainly pop or drop on earnings. I do like this stock around this $20 price. When I look at what it is, the valuation as a long-term investment. Now, keep in mind that this type of sales cycle, this is SaaS, but it's very, very different than something like a CrowdStrike. They're selling into larger institutions and banks, and they don't make decisions very quickly. They're very long sales cycles. This is a very complex investment. And as I always say, guys, at the end of the day, do what's best for you and for your money. Thanks for watching. Have a great rest of your day. Take care.